Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for April 8th, 2018, and I hope everybody's having a great weekend and a restful one at that. Before we get into the charts, obviously I got to let you know, if you haven't tried ForexAnalytix, you got to do it. Try it out. All you have to do is click where it says sign up today. It's only $1 for 10 days. Try it out. Once you log in, make sure you download the mobile app. You can get it from the Google Play Store or the iTunes Store. And then check out, once you've read all through the analysis, go through and go to our chat room right over here. And then once you do that, you can log in and see what we're what all of our intraday traders are trading about. We have a great community, a lot of really awesome traders in there, and I can't take credit for that. Our community is made up of traders like you out there, doing it each and every day, and each and every one of them contributes and makes it a wonderful community. So you should join up just to be part of our community. All right, now next week is there's not a lot of data next week. It's actually a pretty slow data week, but there's some pretty important developments as far as the currency markets go. First of all, I want to talk about Friday's price action, like in the euro specifically. The euro, you can see we were actually just starting to sell off and trying to break a trend line, which it's not illustrated here, but just look at the candle and notice how the daily candle gave us, it's almost a bullish engulfing. It basically neutralized what we were seeing as far as downside goes, and that is concerning. And it's concerning because I was looking at the dollar as trying to gain some strength, trying to muster some strength. Matter of fact, here's the dollar index. It was trying to muster some strength on Thursday coming out of this triangle. But notice that we're so close to this downtrend line here. And because we're so close to the major year-long downtrend line, and we had this reversal candle, you can see it in the dollar index too. I had to close out. We had a pattern in play that we were coming out of this triangle, but I actually closed it for personally, I was shorting the euro too. I actually had to close that out for a loss because the dollar just showed too much weakness on Friday following the NFP, the jobs report, and plus, there's a lot of political shenanigans going on. That's not really the word I'm looking for. I'm really looking for more of the rhetoric between China and the U.S. as far as possible trade war and possible more possible tariffs. And the dollar just was being sold into the weekend, which really I've been fighting trying to be bullish the dollar, but in all actuality, until we break above this downsloping trend line that really comes in at 90.70. 90.75, and then you can see its previous support right over here. Okay, not there. The previous support right here, the dash line that comes in at 91. And until we can get back above that, it's really hard to be bullish the dollar and really have a conviction of being bullish the dollar. And just so you guys know, and we discussed this on our FACE webinar on Friday before the jobs report, I told, I was talking, or I didn't tell, I was talking with Stelios and Contagoulis, which you guys probably know from our team. I said, hey, has anything really changed as far as a macro perspective as far as the dollar goes? Because I still see it as being bearish. And he's like, yeah, nothing's changed. The only thing that really gets me bullish, and I know I've mentioned this in previous week ahead videos, is that the positioning is so poor that the dollar could squeeze at any time. And so I'm trying to position myself for a squeeze. But when you see these reversals intraday, it's hard to stick with a counter trend move when you're just not, the price action isn't giving it to us, and that's exactly what we're seeing with the dollar. Being long the dollar is a tough trade. It's been a tough trade for a year, and nothing's changed. And it started to loosen up to the upside earlier in the week, but Friday just kind of scratched that whole idea, at least in the near term. Now, again, things might change a little bit going into this next week, we do have the FOMC meeting minutes on Wednesday, and maybe the minutes really show us that the rest of the FOMC, the governing board there, not just, the Fed Chair Powell was a little more dovish than the market liked back at the FOMC a couple of weeks ago, and that's what caused this little sell-off here. But maybe the rest of the FOMC is looking through the lens of a more hawkish scope, and if that's the case, maybe that's what creates the bullishness in the dollar. There's one thing, and I'm gonna actually take you right over to some of these indices. There's one thing that I've often talked about that could really give the dollar a boost to the upside, would be equity market weakness. Now, I'll tell you, it's hard for me to get really bearish the S&P, and I'm going to take you into the other indexes as well. It's really hard for me to be bearish the S&P at this point in time until we see, and here, let me get rid of some of these fib levels here, until we see a break below, not only the 200-day moving average, but really below the support zone. You can see it all right through here. The support zone really needs to be taken out, and should that be broken, we could have a swift move down in the S&P. Now, you notice how I drew the possible move to this green trend line here. One of the things that freaks me out a little bit about the S&P breaking down and having a sustained breakdown, at least at this moment, is that the daily sentiment index is in its 20s. Now, once we get below 20, I really start to get nervous being in the same direction as the sentiment. So sentiment is basically I think it's 22 is what it registered on Friday. Don't quote me on that because I have to go and pull it up, and I don't have it right in front of me at this moment in time. I have to go searching through my emails. But the daily sentiment, as it gets below 20, I get a little nervous. In this case, would be too bearish. And so there is a daily trend line in the S&P that comes in right around 2450. I would assume that the stock market, it looks like we want to take out these lows. The way it's trading, as heavy as it's trading, the stock market looks like it wants to really freak some people out. And if it does, I'm thinking because the sentiment is so bearish right now that maybe the DSI gets down towards 10 or 8 or 7, and then we get a sharp bounce in stocks. And I could totally see, and I'm sure you guys are following me visually and in your mind, that you can see stocks just take out these lows, take out all these stops, get everybody freaked out, and then we bounce. But if we do sell off in stocks and we have a little bit of a, that's not even a couple percent here, correction, that would be like, let's say from where we're currently at, that would be 5%, okay? A roughly 5% correction from where we currently stand, but from here it'd be like 2.5 or something. If we had a little sell-off like that, it would also produce dollar strength, and that's the thing that I'm as a currency trader, I'm more concerned what would a sell-off in the S&P do to the currency market, and will that be enough to produce a squeeze in the dollar? I think so. Certain dollar pairs anyway. But I showed you the S&P, but look at the Dow. The Dow had a pretty big rejection here, at this resistance zone, previous support, current resistance, false breakout, failure. The Dow's not too far off of its 200-day moving average. The Nasdaq, you notice the Nasdaq's in a really, here, let's go over to the daily chart here on the Nasdaq. Okay, that was the daily. The Nasdaq, we had this false breakout over here, nearly hit 161% extension of the .com move, and I did tweet the chart actually a couple of days ago. But that false breakout should lead us to a breakdown eventually. But the question is, if we sell off, how far are we going to sell off? Will the NASDAQ go from, 60, let's say 6,400 and shave off another, 7-8%? It's possible. With Amazon in the crosshairs of Donald Trump, and Amazon having such a big weighting on the NASDAQ and on the market in general, could we see a sell-off like that before a recovery? It is entirely possible. So those are things that I think about in regards to the dollar. Now, since we're talking about the dollar, there's $1 pair, and most of you already know this if you've listened to my broadcasts or my interviews, or you've been with me for years in the community, whether with WiseTrade or ForexAnalytix. There's $1 pair that doesn't fit the bill as other dollar pairs. It's something I don't equate, and that's the dollar yen. And I'm just going to take you into the live chart really quick since I'm here. The dollar yen, and all this is on ForexAnalytix, so if you guys ever want to go read up on it. The dollar yen would not factor into dollar strength. If dollar strength came through, we would probably see the yen outpace the dollar. Now, the dollar yen had a pretty important rejection on Friday. We came right into the resistance zone, which is this the shaded area here in red. You can see it. Okay, that's what I call the resistance zone. Now, why it's such a big deal is because it was coming into the underside of this big broken multi-year triangle. So the dollar yen came right in the resistance zone, rejected. We got a false breakout. You can see this dotted line here, and we're approaching channel support. Now, if the dollar yen falls, but the dollar strengthens, okay, so follow me now. The dollar yen falls, but the dollar strengthens against other major currencies, like let's say the euro. Well, what is a currency pair that would move lower? The euro yen. Now, you'll notice that the euro yen hit channel resistance. I'm telling you guys, if the euro yen breaks back below 131, we're probably going to be coming back down towards these channel lows, which could come back down towards 129, maybe even as low as 128 by the time we get down there. So, and you can look at all the other yen pairs too. This video is getting a little long in the tooth, so I don't want to go into all of them in greater detail, but I'll tell you when I will. I will during the FACE webinar. So if you haven't logged into our daily free webinars, make sure you do so. We're there every morning at 7 a.m. Eastern during the trading week. And also, if you guys love this video and you think it was helpful for your trading week next week and your preparation, click the thumbs up button. Tell us you like it on YouTube, and also subscribe to our video so you don't miss any of our great interviews that Dale Pinkert does every single day, or during the trading day, every trading day during the week, not on Saturdays and Sundays, obviously. You guys and gals, have a wonderful rest of your weekend. I hope you're enjoying it. I hope you're being safe, and I will look forward to seeing you all Monday morning. Have a great week.